Australia is obviously impacted by what happens in the global economy, and we're seeing that with the cost of fuel, we're seeing that with how we're being impacted by what's happening in the Ukraine. The increased cost of borrowing, the increased rates in the States does affect our cost of borrowing. We're seeing an increase in the 10-year bond yield. That increases the pressure on our costs of borrowing. So there's factors outside of the central bank in Australia now that are starting to put pressure on some of the banks to look at their variable rates. In terms of the RBA in itself, look, I think we can look at that a little bit in isolation, in the sense that our inflation's running at about 3.5%, 4%, about half of what is happening in the States. And the main focus is on wages growth. They're concerned about increasing rates too quickly, and then the cost pressures that's going to put on mortgage holders. Because in Australia, different to the US, increasing rates affects existing and new borrowers, and particularly with the variable rate pretty much tracks the RBA, albeit there's some external pressures on rates separate to the RBA's monetary policy setting at the moment.
Do you think it'll just have a psychological effect here, what they've done in the States, that Australians who want to take out a loan will think twice about it, and that may impact loan growth?
Yeah, that's the emotive side of it's always an interesting conversation. I think it will have some impact. I think probably the impact might be a little bit around how strong inflation's running over there, and talk of the size of the potential rate increases over the next through to December 22, where they're talking it could be close to 2%. I think if in Australia we had a similar rate increase over that short amount of time, that would really start impacting some mortgage holders.
All right, so you think more impacting owner-occupiers rather than investors?
More impacting owner-occupiers, where the market's been running hot and there's been a lot of borrowings for new home buyers, paying, as we saw, paying prices we haven't seen for a number of years, with growth of 21% last year. I think interestingly as well, it might affect some of those borrowers who've moved into the regional areas, where there's been a lot of new borrowing, dramatic price increases, and a lot of construction, and we may see a flow-on effect to them. But albeit, we're not talking about as dramatic an increase in Australia as they're talking about in the States, with inflation running at such a high level and a real target there. So I think in Australia, the RBA's sensibly being a little bit patient at the moment. They're waiting on that wage growth to come through, and they're very cautious about the impact of a rate rise, albeit we've seen an increase in fixed rates, and there's some external pressures that are starting to come through on the banks, with the states increasing their rates and the bond yields also going up.